We've all heard from so many YouTubers, here's how much you have to have invested by this age so you can earn this amount of dividend income every year once you hit retirement. However, one fundamental flaw they fail to mention in each video is taxes. Because yes, you do have to pay taxes on your dividend income and your capital gain. And well, if you don't, you can be subject to large fines and even jail time. So as an accountant, I'm going to be showing you how much tax you have to pay on your dividend income and your capital gains, whether you're an American or a foreigner who own American stock. And at the end, I'll be showing you ways you can reduce your dividend income and capital gain taxes in legal ways. And hopefully this will give you a better idea of how much capital gain and dividends you can actually make after taking off your taxes. Now, before we can talk about taxes, we must first know whether you're a non-resident alien or a resident alien. Now let's start with a resident alien, which means you're an American citizen either with a green card or you've been in America for more than 183 days. Don't worry, we'll come back to taxes for foreign people holding US stocks very soon. Now, if you're an American and own stocks on the US stock exchange such as Amazon or Apple, you will be paying capital gain taxes when you sell your shares for a profit. Now, if you're a US citizen, the tax rates in 2023 for capital gains are 0%, 15% and 20%. Depending on which individual tax bracket you're in. Now, I'm not going to talk about all the individual tax brackets as it will take too long, but here's a screenshot and I'll put the link below in the description if you want to check it out. But don't go yet, we still need to talk about your dividend income taxes. But before we go there, it is important to note that all the above is for long-term capital gains. This means you have to have held the stock for more than 1 year before selling. Therefore, if you make a profit from selling your stock within 1 year, you have to pay short-term capital gain taxes, which is the same tax rate as what you would pay on your ordinary income, such as your salary. But remember, you only pay capital gain taxes when you sell. So if your stock goes up in value but you don't sell, you don't pay taxes. Furthermore, if you sell your stock for a loss, you don't have to pay tax on that. Anyway, I'll come back to that later, as selling some of your stocks for a loss can actually help reduce your capital gain taxes. Now, dividend taxes for US citizens depends on whether you have ordinary dividends or qualified dividends. Basically, if you have ordinary dividends, you pay the same tax as your ordinary income or salary tax rate. But if you have qualified dividends, you pay a lower tax rates, which are the same as your capital gain taxes of 0%, 15% and 20%. Now, if you want to know if your stock is a qualified dividend or an ordinary dividend, most likely if you've held the stock for a couple of months, it's more likely to be a qualified dividend. Now on to tax rates for non-US citizens of capital gain taxes and dividend income taxes. But don't worry, we'll come back to how you can reduce your capital gain taxes and dividend income taxes later on in the video. Now, to be a non-US resident, you can't have a US citizenship and you can't have been in America for more than 183 days of the year. Now, for a foreigner, you'll be paying slightly different taxes on US stocks compared to an American. Now, great news for you foreigners owning US stocks, you don't have to pay any capital gains to the US government when you sell your stocks for a profit. However, it is likely you have to pay capital gain taxes to the country you live in. Now on to dividends for foreigners owning US stocks. Now this time you're not free from paying taxes to the US. Now non-US citizens earning dividend income from US stocks have to pay 30% taxes. However, depending on what country you live in, there may be a treaty between America and your country, meaning you could be paying lower taxes. Here's a screenshot of some of the treaties between the US and other countries, and I'll also chuck a link below. Now before you go, let's talk about how you can actually reduce your capital gains taxes and your dividend income taxes for a US citizen and a non-US citizen. Now remember when I said you can use your capital losses to actually reduce your taxes? Here is how. So if you made losses on one investment and made capital gains on another investment, you can actually deduct that loss off your capital gains before calculating your capital gains taxes. For example, if you make a loss of $10 and a gain of $100, you only pay tax on the $90 rather than the $100. Now another way to further decrease your dividend income taxes is to own qualified dividends rather than ordinary dividends, as you pay a lower tax rate. Now finally, the last way to reduce your dividend income taxes as a US citizen is to open a tax advantage brokerage account such as an IRA, where you can defer the taxes paid until you're in a lower income tax bracket. Now finally, to put all of this into perspective, most YouTubers say you can live off a portfolio of $1 million with a dividend yield of 4%, meaning you get $40,000 a year in dividend income. However, this isn't exactly true, as a non-US citizen paying 30% taxes will actually have to pay $12,000 in taxes, leaving them only with $28,000 after taxes. Now this is not financial advice and you should seek professional help when going to pay your taxes. Lastly, feel free to comment any investing or financial things you need help with below. Thanks for watching and I'll see you next time.